much. Well, those billion-dollar startups have created a secondary wave of derivative startups. Numerous business models that are building on others' successes. Charlie Wells wrote the story for the Wall Street Journal. He is with me now. Charlie, thanks for coming by to talk about this.
Great to be here.
So you cite car leasing company Breeze. This is an example of, let's say, a derivative startup to Uber. And we know Breeze basically leases cars to would-be Uber drivers, would-be Lyft drivers. But why would an investor go for Breeze instead of Lyft or Uber?
Deirdre, that is a great question. So one of the investors I spoke with actually said that he felt like he'd missed the boat by just not investing in Uber when it was clear that it was going to become a huge company. Breeze,
so even for professional investors,
yes,
it's a second chance.
Exactly, because we often forget that it is difficult to get investment in these hot companies. Uber and Airbnb, they're huge. And even for the average person, even some VCs, tough to get in there.
So even if the person does make the right conviction call, he or she may not have access even as a pro, which I think is a great point.
Exactly right.
So Airbnb is another one you referenced. What kind of derivative startups are you seeing around this company?
We've seen these pop up about half a dozen in the past 2 years. There's one in Israel, there's one in San Francisco, some in Vancouver, and they essentially manage properties for people. So let's say your apartment is listed on Airbnb. You don't want to deal with a guest emergency. You don't want to deliver the key. That's where these companies come in.
Okay, so as far as the risk, though, I mean, I know that these companies, and the one that you're talking about, Guesty, which is Israeli-based. That's the one that says sort of, okay, hey, listen, we're helping Airbnb grow. We are basically helping them stay consistent. But from an investor's point of view, how much risk is there in investing in these second wave companies?
Right. I spoke with a Harvard professor who essentially said that these derivative startups are doubly risky in a sense. And we know that startups are risky. They often fail. If you're pegging your success to something else, there's even more risk there.
Meaning if I'm Airbnb, or a Guesty, I should say, if Airbnb doesn't do well and that's my only lifeline, it's a bigger risk.
That's exactly right.
So how many of these secondary wave or derivative startups, as you call them in your article, how many are out there?
They seem to be popping up even faster than ever before. We know that there are, hundreds of millions of dollars in VC funding looking for the next hot marketplace, the next Uber, the next Airbnb. So these are attractive to a lot of investors.
Charlie, thank you very much.
Wonderful.
Fascinating read. Charlie Wells joining me there from the Wall Street Journal. You can check it out on WSJ.com. Well